Everyone wants more tax deductions, but I'm going to tell you something most CPAs won't. Some e-commerce businesses are actually paying more in taxes because they're chasing deductions the wrong way. The worst part, they don't even realize it's happening. Because while you're asking, what else can I write off? What you should be asking is, are my books even right? Because if they're not, those deductions that you're chasing, they don't even count. I was reviewing a set of books the other day for an e-commerce business owner, and they told me they're trying to lower their tax bill. They had a Shopify store, multiple payment processors, inventory coming in from overseas, the whole setup. And on the surface, everything looked fine. Revenue looked strong, ad spend was there, cost of goods sold seemed reasonable. Then I noticed something that completely changed everything. They had taken money out of their personal account and transferred into the business to cover inventory and recorded it as income. Now on paper, that might seem harmless, but here's what actually happened. They have a bookkeeping problem. Before we even talk about tax deductions, if your numbers are wrong, nothing else matters. And here's the truth most e-commerce business owners don't want to hear. Tax deductions are not about what you spend. They're about what you can prove. The IRS doesn't care what you meant to do. They don't care if something was probably business related. They care about one thing. Can you clearly show through your records that this was a legitimate business expense? If you can't prove it, you don't get it. And this is where e-commerce businesses get hit the hardest because you've got multiple platforms, Shopify, Amazon, Etsy. You've got payment processors, Stripe, PayPal, Shop Pay, ad platforms, Meta, Google, and TikTok. Inventories, returns, refunds, fees. If your books aren't dialed in, your numbers are already off before you even think about starting to take deductions. So before we get into the actual deductions you should know for 2026, just understand this. You can't optimize taxes on broken numbers. Once this is handled, then deductions actually start to matter. Let's start with one of the biggest tax deductions available in 2026. That has nothing to do with expenses. It's called qualified business income, or QBI. And depending on your income, you can deduct up to 20% of your business profit. Now here's why this matters for e-commerce. Your profit is already harder to track because you have inventory timing, cost of goods sold, refunds and chargebacks, platform fees. If you're overstating income because of misclassified transfers, you're not just paying more tax, you're also messing up the biggest deduction available to you. One of the biggest tax breaks in 2026 isn't something you go out and buy. It's something you qualify for based on having clean, accurate numbers. Let me ask you this. If you ever bought something for your e-commerce business, like a computer, a camera, warehouse equipment, or even packaging machines, and immediately thought, perfect, I can write this off. But here's the problem. Just because you bought something doesn't mean you automatically get the deduction. In 2026, we've got powerful rules like bonus depreciation in Section 179. So yes, you can write off that equipment, but only if it's handled correctly. And this is where e-commerce business owners mess it up. It gets mixed in with inventory, or categorized as cost of goods sold, or just thrown into miscellaneous expense. So now your financials are off, and your deduction isn't clean. Buying something doesn't create this deduction. Recording it correctly does. Now on the flip side, some of the easiest deductions in e-commerce are the ones completely overlooked. Things like packaging supplies, small tools, office equipment, software subscriptions. Most of these fall under the $2,500 threshold where you can expense them immediately. But here's what I see all the time. They're buried inside of Shopify payouts, or lumped together in one big deposit, or mixed with personal Amazon purchases. So they never get clearly categorized. And if they're not clearly categorized, they don't get fully captured. They're missed because e-commerce books are messy. This one still applies, especially if you're running inventory, going to suppliers, handling local fulfillment. Almost no one can prove it. You need mileage logs, dates, business purposes, and e-commerce owners are busy, so that gets skipped. So now you've got a real deduction that you still can't take. That deduction isn't the hard part. The documentation is. A lot of e-commerce businesses start from home, so this one matters. Whether it's a dedicated office space or even a space where you manage orders, ads, or customer service, the rule is simple. Regular and exclusive use. Some of the best deductions aren't even in your bookkeeping. Health insurance, retirement contributions, these are taken on your personal return. But because e-commerce owners focus so much on platforms and payouts, they forget about these completely. Or worse, they record them wrong and distort their financials. Just because money leaves your business doesn't mean it belongs on your profit and loss. This is huge for e-commerce. This still applies, but e-commerce owners often misuse it. Travel to suppliers, industry events, client meetings, these can be deductible. Meals are only partially deductible. Gifts have limits. Everything needs documentation. So again, it's not about whether it feels like a business expense, it's about whether it's properly tracked and supported. This comes up a lot with e-commerce businesses using freelancers. The threshold changed from 600 to 2,000 for 2026. But remember, reporting and deductibility are not the same. You can still deduct legitimate expenses, even if no 1099 is required. The example I gave, that's not rare. It's happening all the time in e-commerce because everything gets distorted. Your profit, your taxes, your deductions, everything. Most e-commerce business owners think they're missing deductions on their tax return, but in reality, they're missing them in their bookkeeping. Or worse, they're creating problems that increase their tax bill without even realizing it. The biggest tax mistake isn't missing deductions. It's having books that make those deductions impossible to claim correctly. So if you're running an e-commerce business right now and thinking, yeah, my books probably aren't as clean as they should be, you're not alone. This is exactly what we help e-commerce business owners fix every single day. Because once your books are clean, once your numbers actually make sense across Shopify, Amazon, Stripe, and everything else, everything gets easier. Your taxes, your decisions, your profitability, all of it. So if you want to help get your books cleaned up, organized, and actually working for you instead of against you, I put a link in the description for our landing page where you can learn more about working with us.